or
I'm
anything
here
that
with Mr. Cayden Chang, and he's one of the top value investing trainers in Singapore. He has brought people like Mary Buffett, Lauren Templeton to Singapore. He recently just hosted a Investify Symposium,
Yeah.
right? And that's where I reached out to him and said, okay, let's do a video to collaborate and also to share value with you about value investing, right? Anything that he knows in his brain about value investing, which people would kill to learn or whatever is in his
Yeah.
in his brain. And one very good thing about Cayden is that he is able to simplify difficult concepts into very very simple bite size that any average Joe can understand, right? So Cayden, maybe you want to share a little bit about like your story, how you got into value investing, and how has value investing changed your life?
Okay, I think it dates way back when I went to the university. That was, I'm 47 this year. So university, I would be in my early 20s. So after I graduated from NUS with 2 degrees, I have a Bachelor of Science and then Bachelor of Science with Honours. Yeah, so biology and then zoology. So after I graduated, I started working. And I predominantly need to work is because I need to work to pay off my loan, my tuition fee loan. So during that time, it was 25K. So I realized that after I graduated, my net worth was negative 25K.
Okay.
Yeah. So I wasn't rich, but my parents say, oh, you know, you got a degree, you become rich. So the moment I graduated, actually I became poor because net worth was negative 25K. So I worked to pay off the loan. Yeah. So it took me about like 2 years. 2 years to pay off, which is quite quick at that point in time. And I did it very quickly because I have 2 jobs. So daytime, I work in the stat board, and then at night, I teach in the tuition center. Kids, I give tuition. So 2 jobs, 2 years, eventually I pay off a 25K loan. So after 2 years, my net worth was 0. So I still not rich yet. Yeah. Then what I did was I realized that I wasn't that smart, even though I got 2 degrees. Yeah, I realized that the school that I've been to never teach me how to be rich. They only teach me that I have a degree, that I need to work now.
Can anyone else relate to this?
Yeah,
I think it's very yeah.
So if you're having a degree, you may be having the same problem as me. So after my net worth becomes 0, I was thinking, how can I like become rich? Then the only thing that I know is save. Work, save.
Yeah.
So at that point in time, I thought that's a secret to success. So I work, save, 2 jobs, work, save. And then in year 2000, I saved about 50K.
Okay.
Yeah, Sing dollars. Yeah, so I look at my bank account, I was quite happy.
Year 2000 means you were how old? How many years of saving was that?
Wow, year 2000. Actually, I also forgot.
Okay.
Yeah, I think maybe about 6-7 years or 7-8 years or so.
Okay, 7 years of savings about 50K.
So 50K. So 50K to me at that point in time, it was a lot. Because last time my bank account was 0.
Yeah.
So 0 to 2 figure, 2 to 3, 3 to 4, 4 to 5 is like a big deal, from 0 to 5. So 50K was a big deal. But I was thinking, if I continue to work, save, this 50K will take how long to become 500K or 5 million? So there must be a way out, right? So I was thinking maybe the way out is to invest. So in year 2000, when I opened a newspaper, I saw a lot of startup companies. Wow, the CEO become very rich. They are very young. They're in my 20s, much younger than me, So I was thinking, me older than them, I got 2 degrees. How come I'm poorer than them? So it doesn't make sense. So I realized that maybe they do something that I didn't do. Is they own a business.
Okay,
But,
own a business.
Yeah, but I was working and saving. I didn't own a business.
Okay.
So I was thinking they are young, they own a business, they own a startup business. So I was thinking that if I reverse the process, maybe I should follow them shamelessly. So I took the money that I have, I wanted to own a business. But I don't have the entrepreneur mindset, like you right now. I was like blah, stone. So what I did was I took the 50K. If I cannot become an entrepreneur, maybe I could become an investor. So I took the money and then invest. I invest in 2 category of companies. One is startup companies and one is public listed companies.
Okay.
But both of them, they are in the technology industry.
Yeah.
Wow. So after I invest, I was quite happy. I was thinking, I will be rich.
Okay.
Maybe my face will appear in the newspaper. 10 years later, my face really appeared in the newspaper, but for the wrong reason. For the wrong reason is because the next year, I invested all my money in 2000. In year 2001, the dotcom bubble burst.
Yeah. Okay.
Yeah. So the savings that I have...
What were the stocks that were very hot at the point, like Amazon or Pets.com?
During that time, I think Google, I only remember Google. And the rest of the funny technology companies, frankly tell you, I also don't know what they are because I just gamble. Yeah. Then eventually, year 2000, when the dot-com bubble burst, the stock market crashed. And then, I hear people say, must cut loss, later become 0. So I cut loss. Actually, when I cut loss, I'm actually realizing the loss. So the 50K only left until a few $100. Yeah. So
really,
that was, So that was the first time that I really lose so much money. So losing money was the painful part. But I think the second one that money cannot buy back is the time.
Yeah.
Because I took many years to save.
7 years.
Yeah. So the...
Okay, maybe I sit closer a
Oh,
little bit.
yeah, sorry.
Yeah.
Then eventually, not only I lost the money, I lost the time. And I thought that was the worst.
Yeah.
Because what can be worse than all the money all wiped out, right? Then I make a second foolish mistake. Is the money that I invested is supposed to be meant for my wedding. Yeah, so in other words, I use my wedding money to invest.
Yeah.
And then after the money disappeared, right, it's just a couple of weeks before my wedding dinner. So I need to find money to pay off the wedding dinner. So eventually I call all my friends, say I want to borrow money and so on. Then I realized that, wow, true friends are those who lend me money.
Okay.
But then I realized I don't have true friends. Because
Okay.
nobody want to lend me. Then eventually what happened was, the irony in life is, eventually my girlfriend, right, at that point in time, she got about 50K. So she lent me the money so that I can marry her. Which is why in 2001 I have no choice but to marry her. So in 2001 we got married.
Yeah.
So we got married, my net worth become negative 50K.
Yeah.
And then my wife net worth becomes 0.
Yeah.
Yeah. So I think the entire episode, the biggest learning lesson from the entire episode is sometimes we think they're very smart because we got a degree or whatever. But in investing, we need the relevant knowledge. We cannot like read a book or we got an engineering degree or finance degree thinking that we are investing.
Correct.
So investing was never taught in school. I think until today
never.
also. Yeah, never. They teach
Okay,
accounting.
they did teach me accounting, they did teach me financial analysis, they did teach me how's discounted cash flow, interest rate, economics. But I don't think they actually teach like what is value investing. No, never.
And what's investing?
I studied in business school, so
Correct. So the academic part where you have a finance degree or accounting, right, is very different when you invest. It requires two set of skills altogether, and these two set of skills are different. So the biggest learning lesson is we need to have the relevant knowledge. And if we need to have relevant knowledge, we need to learn from someone. If you want to be a good swimmer, maybe you learn from a good swimming coach.
Correct.
Basketball player or basketball coach and so on. So investing, we need to find somebody.
So who do you learn from?
Oh, there's just too many to be listed. So for example, in the entire world, there are only, as of today, there are only 2 universities that teach people how to do value investing. One is Columbia Business School, which is in New York.
Correct.
And the other one is Ivy Business School, which is in Canada. So I've been to both. So the professor, New York one is called Bruce Greenwald. The Canada one is called George Athanasakos. So both are professors. So I learned from this. But of course, other than these two, there are many. Like, years ago, Mary Buffett, or recently Laura Templeton, or through reading books, or through making mistakes. We have to learn from someone.
Okay. So, if let's say we are a complete beginner, okay? Let's say someone has 50K. Okay, let's say if you could replay time, okay? Now you got 50K to invest in.
Okay, good question.
Then, what would you have done differently?
Okay, so let's say if I could turn back time, back to zero, I got zero knowledge at the 50K. I need to set aside maybe 5K, 10K to learn something. I don't think it's that expensive, 10K. Maybe 5K to set aside to learn something. So if I set aside 5K to learn something, I'm left with 45K. So the 5K or plus minus, I need to set aside to get the knowledge first.
Okay.
Then the 45K will be the investing capital.
Okay. Okay, let's say 5K to get knowledge, but why not from a book or something? Like a book is $20, right? But people are lazy to read a book.
It's a good question. If let's say they don't have the money to learn something or to find a coach, of course they can start by reading a book. They can buy $20, $25. But the thing is, once you read a book, it's very difficult for people to get started. There are a few reasons. Number one is many people, when they buy a book, they don't finish the book. Even if they finish the book, right, they may not know everything. And if they want to ask, they cannot ask the book. Now, if reading a book can solve, can really learn everything, right, then people don't need to take O-level. They don't need to go to school. They just need to buy all the O-level textbook, right? Do 10-year series and then take O-level. So the difference between buying a book and a human is humans is there to answer all questions, to hold your hand.
True.
And
that's why a mentor is important.
Mentor important. And nobody has ever become a gold medalist in swimming by reading a book on swimming. You have to
like coaching has to be 2 ways, right? That's why like why people engage me to do Facebook marketing or like to teach them Facebook marketing is because I give a lot of videos online for free teach about Facebook marketing, right? But the thing is that when it's me outright. It's always like I don't ever get to answer their questions and all that,
Yeah,
and
correct.
that's why they will still need coaching.
Yeah, they need coaching. They need to ask you questions, and then there's a two-way communication.
Correct.
Book can but it's very difficult.
So okay, I was reading this book, right?
Yeah.
Invest lah, right?
Yeah.
Invest lah. So Cayden is the founder of MindKinesis and Value Investing Academy. So this book is like the average Joe's guide to investing, where like
Yeah.
even if you never started reading, right, I highly recommend this book, right?
Yeah.
So I was reading, and okay, so what is value investing actually? Like, how is value investing different from day trading and
Okay.
yeah.
So your question has two parts. One is what is value investing. Now, value investing, if I could define in one sentence, is simply to buy a cheap and good company. Yeah. So you Hokkien, IP, IT, you know,
Okay.
which is some people why they drive to JB to buy seafood, or eat seafood lah, or
Yeah.
buy stuff lah, because it's cheap and good ma.
Uh-huh.
Yeah. So value investing is simply buy a business that's cheap and good.
Mm.
So that's a definition. Yeah.
So what's the difference between a value of something and the price of something?
Yeah. Oh, maybe I go back to a second
Yeah,
question
okay.
about the speculation.
Or day trading?
Yeah, day
versus
trading.
Value investing.
Yeah. So when we talk about value investing, just now the definition is buying something cheap and good. So the intention is to own a business.
Mm.
Yep.
Correct.
Yep. But day trading is guessing stock prices using whatever
Mm.
things that they talk about. Usually they talk about this thing called technical analysis.
Yeah.
Yeah. So one is buying asset that pays us. One is guessing stock prices based on whatever methodology that you know.
Correct.
So whichever works, we just need to ask ourselves. Now today, who are the richest people in the world? The Forbes list. Yeah, Amazon, you know, the
Bill
Jeff
Gates, Jeff
Yeah,
Bezos, Zara, Ortega, Mancio,
Yeah,
Ortega,
the whole list goes on.
Warren Buffett.
Yeah, Warren Buffett and Hong Kong, Li Ka-shing, who
Li
recently
Ka-shing.
retired. Then Japan, we have the CEO of SoftBank, the founder of
Yeah,
Uniqlo.
yeah.
So if you look at all this, even though they are in different industry, but they share one thing in common: is everyone owns a business.
Mm.
But you have never seen anyone in the Forbes list trying to guess stock prices.
Mm.
Yeah. So now the question is, if they do not become rich by guessing stock prices, why not? There must be a reason. Yeah, there must be a reason.
But would you say what Warren Buffett owns? But I mean, he owns a business, Berkshire Hathaway,
yeah.
but it's a fund, it's a hedge fund, it's a...
Okay,
like-
his philosophy is very easy. When people ask him, he always think that it's as though you buy a farm. You buy a farm. And then when you buy a farm, the farm may produce corn, produce rice, produce wheat. Yeah. So once you have a farm, you take the corns, whatever you sell away, it gives you income.
Yeah.
Yeah. And for example, let's say just opposite this, there's an MMA, you know, a
Yeah.
mixed martial art.
Okay.
So it's a business, it's because people go there, attend classes,
Yeah.
then they pay them, all generate income.
Correct.
But they do not guess stock prices, ma. Yeah, or the CEO of SoftBank, or the founder of Yao UOB. Every day he go to office, he don't open his laptop and do day trading.
Yeah, of course.
Yeah,
Okay, so you're saying there's no day traders who are very, very wealthy.
I think so. Maybe other than George Soros, I do not see anyone. Maybe I'm wrong.
Okay.
So we go by probability. So
Okay.
you look at all the richest people in the world, you go by probability.
Okay.
Yeah, which one belongs to the owning business
Yeah.
type? Which one belongs to the guessing stock price?
Okay.
And then that will answer the question about which one works.
So I think the one thing about Singaporeans, right, is that they're very afraid of risk, right? So is
Yeah.
investment risky?
Investment is risky provided they have no knowledge. For example, I fly very often. Every month I fly very often. So now the question is flying a plane risky? Of course, it depends on who fly. If I fly,
Yeah.
then it's risky.
Yeah.
If a
He's a
trained
pilot.
pilot fly, then not risky. Then I'm a
Okay.
cancer survivor.
Yeah.
Then when I go for my surgery, a surgeon operate.
Yeah.
But if I operate myself, risky. If the surgeon operate, it's low risk. Right?
Okay.
The reason why low risk is because the surgeon is well trained.
Okay.
The pilot is well trained.
Cool.
And then investing, if the person is not well trained, they know absolutely nothing, it's risky. But if they are properly guided, taught, they know how to invest, whatever they go through a process by mentor, like you, Facebook marketing,
Okay.
then the risk will be minimized.
True.
Yeah. So the key is to minimize the risk by having the knowledge
Okay.
and some guidance.
So I was reading the book, right, and then they talk about like economic moat, right? You must invest in a business that has an economic moat. Means like people cannot copy so easily, right?
Yeah,
Or
it's difficult.
It's like a high barrier to entry,
Entry,
or it's not so easily it
Duplicated.
always has a competitive edge,
Yeah.
right? So what are the factors that give a business its economic moat?
What? This is what the answer is. It's very long.
Okay,
but I can give you some
Yeah.
examples. Like for example, Sheng Siong. Like Sheng Siong. So before Sheng Siong entered into the market, it was dominated by NTUC, right? And then after that by Cold Storage. So Cold Storage target the high end, like malls go there, very clean place. Then the NTUC is everyone for the masses.
Yeah.
So suddenly there's this guy botache, entrepreneur, suddenly start this
Yeah.
thing called Sheng Siong. I was thinking, wow, can this guy survive? Wow, but the interesting thing is he penetrated, he make it 24 hours. He even sell the wet market fishes inside, Yeah, so the thing is, what makes Sheng Siong so special? Because they target the Chinese, the Chinese. Yeah, so they sell things really cheap.
Okay.
Yeah, so one example of economy mode is called economy of scale
But
or a low cost producer
yeah.
where they sell cheap things.
Okay. So low cost producer, that's one.
So this
economic
one.
mode. Okay.
This one.
But then again, for Sheng Siong, right, you must know who his daughter-in-law marry.
Yeah lah.
Right. So it's related to the Lee family. So,
Yeah.
So that that is an economic mode also. The relationship that he has with the
Okay lah, this one quite sensitive, so maybe I don't talk about this. But the key thing is a low cost producer or having economy of scale is one example of economic mode.
Correct.
But but not all companies can do this. For example, if it's a provision shop, they cannot do this because they're small. But Sheng Siong is big. So in order for somebody to be a low cost producer or to have an economy of scale, right, they need to be huge.
Yeah, true.
So they can buy things in bulk. And the next one is preferably they have the first mover advantage. But in this case, Sheng Siong don't have.
Yeah.
But they went in for some unknown reason. They really penetrated market. Until today I'm still quite amazed.
Yeah.
Wow, I thought the market is saturated, but he did it, no?
Yeah.
Wow, this is amazing.
Okay.
So entrepreneur is an entrepreneur.
So so
Economy of scale,
economies of scale. Yeah. What a startup has is agility. What a big organization has is scale. Yeah, a big organization, right? They don't have as much agility as a startup, because if they want to change the decision, right, they will have to ask the higher management everything. Or even if the management wants to make a change, right, it can take 3 months to make one decision change. But for a startup, right, tomorrow if you can change the business very easily. So a startup has agility, and a big company has scale, and we need to always make use of our advantages, right? So if you are running a startup, then you need to know, okay, since my what is that I can pivot very fast, then I need to maximize that ability.
Yeah, so if you're starting out with a startup company, I think you need to think of the service and product, what makes it unique.
Okay.
But if you're an entrepreneur or if you're not an entrepreneur, actually this one is easier said than done. It requires a lot of thinking and then execution, and sometimes things don't work out. It's really not easy. I mean, I'm quite sure Alaric can share his journey in his Facebook marketing. It's not easy.
Yeah.
It really needs some guidance.
Okay, same thing. Like people say, like does business require a lot of money, or does is business risky? For me, since 19 years old, when I first started my first business, right, which is a healthy food delivery business, all the way until my entrepreneurship platform, to my cosmetic business, to my sales and marketing agency, to my coaching business, none of these business, I've never lost money from any of these businesses before, right? So I don't think that business is risky. Okay. Why I don't lose money is because, number one, I use other people's money, right? Number two is, if I don't have money in the first place to lose, then it's very hard to lose money. When I first started, right? So I don't think what he said was right, is that it depends on who's flying the aeroplane. It depends on like, do you educate yourself? Do you read books? Do you go for seminars? Do you listen to success audios? This kind of stuff. Yeah. Okay. Cool. So economic mode. Okay. Then what about
It's one example, like economy of scale, low cost producer.
Okay. Then and also like network effect, switching costs, this kind of stuff. Okay. Then what kind of skill set, right, must a person who wants to learn value investing have? Means, must he know accounting? Must he be able to read a cash flow statement, income statement, balance sheet? Must he be a business person? Must he know the law? What are the key skill sets? I mean, there are a lot of like things that you definitely need to know, but what are the key skill sets that a value investor needs to know?
I think the key thing is just quite simple. It's just the willingness to learn.
Okay.
Yeah, willingness to learn. I think this is the most important.
Mm-hmm.
So this is more like a mindset rather than actual technical skills about financial stuff. So the thing is, we must be willing to learn, and we must be open to it.
Mm-hmm.
Yeah, open to it. And when I say willing to learn, open to it, because sometimes when people hear investing, there's some negative connotation. Like, investing.
I don't think so.
Maybe it's a scam. Or how is it possible? Last time I lost money before, that kind of thing. So there may be some baggage that people are carrying. based on what they have hearsay and so on. Because that like that before they learn, they say, oh, it's dangerous. So they have certain blockage. Yeah. So they must be willing to just explore one more time, take one more step. But this one a bit of luck. Because if last time for many years you kena some bad people, right, you kena cheated, then you think that all training are like cheat.
Yeah.
So this is a bit heng sui, some people they learn, one time kena you found a good person.
Yeah,
Sometimes you kena find bad person.
There are a lot of people who teach forex trading. A lot of people think value investing. A lot of people who teach all kinds of things about arbitrage, Bitcoin. They teach all kinds of things.
So in other words, the person just have to attend, listen, just open mind, listen first. Then after that, ask the person some question, and then after that you make a choice. So in other words, you must be open to learn. So after you're open to learn, you're willing to accept some guidance or whatever. Then the next step is some technical skills. So
what
it's a long list.
What's the key?
The key thing is
the long list. Just say the long list.
So if the long list consists of two categories. One is the mindset. And remember, as value investors, we are simply buying a cheap and good business. We are investors. So we are a business owner. We are never there to be fortune teller to get stock price. So this is the first fundamental. And the second one is the technical skills where you need to learn about numbers. But numbers is, my background is in biology, So if I tell my classmates, zoology graduates, say, hey, you need to learn financial statement, their mind is going to explode, So to them is, what is this? It must be very difficult. Now, difficult is true, but it all depends on who teach. So if you ask the professor will make it very difficult. But I'm a layman. I'm not a professor in accounting. And because I'm not a professor in accounting, I want people to teach me simple things. Don't give me complex things. And because I always long for simple things. And because of that, right, I realized that things actually can be made simple. Okay, number one, can you please do this? Number two, can you please do this? Number three, this means this. So I think why my class is very popular is because number one, I'm very funny. Sorry, a bit of self-praise. Like I can crack any foolish thing and they find very funny. Number two, I think they felt that I'm there sincere. Sincerity is quite difficult to like. It's just me. Second thing. And the third thing is because I'm able to keep things very simple, step by step. And I realized I didn't know. I realized that making things simple is actually a special skill. I didn't know until people tell me, hey, how come you got these special skills to make things simple? Then I realized that I got one superpower, which is to make things simple. And because
I think that's very important for a teacher. Like as a teacher, right, you have to be the best at what you do, right? Like Warren Buffett doesn't even teach, right? Bill Gates doesn't even teach. But one thing about a teacher, right, is that you need to be good at teaching. You need to be better at teaching than you are. Okay, you need to be good at the subject, but you need to be very good at teaching as well. For example, Michael Phelps' coach cannot swim faster than Michael Phelps, but he's still Michael Phelps' coach. Michael Jordan's coach cannot swim faster than Michael Jordan, but he's still Michael Jordan's coach, right? Phil Jackson. So he is a good coach. It doesn't mean he's a good player, but he's a good coach. But of course, he must know the game. He must know at least the theory side of things and all that. So
a person who is technically inclined may not mean that they know how to teach. Which is why if you go to school, whether primary school level, you realize that not all teachers can teach.
True.
You have one favorite one, like this one very funny, this one making simple. Then it's like, next time when I graduate, you always remember this teacher.
Okay, cool. Then so what were the list of skill sets? Accounting, calculation, plus minus times divide cannot.
I think I think first thing you need to know what's the financial statements, which is actually can be very simple. And then after that the ratios. And remember but remember numbers are numbers. Numbers are date. The key thing is to understand what does the numbers tell a story. So for example, like if you watch some Angmo shows, like what do you call this? Those doctors who go and do autopsy, right? They always say, they go and open a corpse, see the body, and then say, based on the body, the decay, this person has died for 5 hours. So this 5 hours, the wound is here. It simply means this. But the corpse is dead, But they always say that the corpse tell a story.
Correct.
So right now is we look at one piece of paper, all the numbers. What does this number? The number must tell a story. Whether the company is making money or not, are they losing money? Are they making money fast? Are the management honest? So the key thing is to decipher what the numbers say, which is why you need like the basketball coach to tell you, what does this number mean? Then make things more fun and then easy. I didn't know that number tells a story.
Recently I got very, very interested in like reading financial statements. Last time I normally just read a lot of books, like mindset books, that kind, right? But nowadays I like to read financial statements, 100 over pages of a company, what the chairman says and all that. Right? Because when you read a financial statement, right, especially no matter what business you're in, right, you should read the financial statement of your competitor that's publicly listed. Because then you know what's the normal profit margin, what is the expenses in the normal expenses, you know like what are the things that you need to focus on, how much is in R&D, that kind of things. And I think that knowing accounting is a very, very powerful skill. And okay, like when I first graduated from business school, right, at first I thought like whatever I learned in business, right, not very useful. Like when I first graduated from business school and I went out to the market to hustle, right, or to like work hard and to grind, right, I realized that what I needed was sales skills, marketing skills, branding skills. These 3 skills, right, can make you a lot of money already, even if you just have these 3 skills. But as I did business more and more, like over 2 years and more, right, then I started to understand, wow, actually whatever I learned in business school, right, actually is very, very important. And I think a lot of students have the same impression about business school. They feel like, wow, super waste time. Because okay, when you really go and learn business school, for those business school students, it's really like they'll ask you, what's the 4 trends that are in the world right now? What are the 4 factors of
4 P's?
4 P's of marketing, or what are the 5 trends about human resource? What are the 6 factors of that affect a customer's buying behavior, right? Which, if you read the answer, right, it's very common sense. Like, I already knew this, right? But business school, right, puts it into a placeholder for you. It's like it puts in a cup, right, for you to store the information. So like if I didn't go to business school that teaches me accounting, financial, like like what's interest rate and economics, and like organizational behavior, human resource, public relations, marketing, sales, these kind of things, right? It gives me the placeholder such that whenever I read books nowadays, right, it makes sense. Compared to if I didn't have these fundamentals.
I think I suppose in the early days the context was learning was to pass exam. Was to get an A and so on. And then so if I get A, so what? It's only when we graduate then the dots start to connect. So in fact, whatever we learn in the early days, you'll be useful, provided right now you connect the dots. Like for example, I give you what was it? Like the SWOT analysis, the strength, weakness, opportunity, and threats. Last time you study case study, then pass exam, but right now, if you look at it, you can use the same framework, your own business, and what's the strength, what's the weakness. Then you realize that actually last time when you use it, actually it's quite useful.
So it gives you the framework.
I give you the framework.
It's like the skeleton for it gives you the cup so that next time when you want to store information, right, you know which. If not, business is too dynamic.
If you use it by exam, then it doesn't make sense.
True. Okay. Then so I was reading a book also. Then they talk about how to value a company, right? So what are the models that we use to value a company? For example, net asset value, market value, fair market value.
This is quite complex. This is quite complex.
Just a simple one that.
There are various ways of evaluating company. But before we talk about this term valuation, it sounds quite complex. So just now we talk about value investing is buying a cheap and a good company. So in other words, predominantly Warren Buffett like 2 types of company. One is cheap, good, and then grow. First it must be good first, then it must be cheap, and then it grow. This is the ultimate. So when it grows, that means when the company makes more and more money very quickly in the shortest period of time, the share price will go up. So cheap, good, and grow. And the next type of company is called cheap and good. If you cannot find the first type, you go for a second type. So in other words, once you check off certain criteria in which during our training we always provide very easy one check, and then you pass already. Okay, now the company is good. Then next one it must be cheap. So Warren Buffett's concept, he always talk about buying $1 for 50 cents. In simple terms, that if let's say I have one piece of $1 note, you will only pay 50 cents for this piece of dollar note. But in order for us to know that this piece of paper is worth $1, there's some mathematical calculation involved. But fortunately, right now technology is so advanced. Last time you used scientific calculator press. So right now all the calculation, what we do is we put it online. The student just need to understand the algorithm behind and then just copy and paste. So there are many forms of model. The commonly used, even the Laura Templeton was saying that the commonly used is called discounted cash flow.
Explain discounted cash flow. Let's take the next few minutes to explain discounted cash flow.
So I can put it very simply because this one will take 30 minutes to explain. So discounted cash flow, it simply means that when we own a business, let me just do a quick rewind.
Okay.
So when we buy a business today, we are actually buying the company's future.
Okay.
Yeah. So if I give an analogy, is for example, let's say I'm a guy and then I'm dating a girl. No, sorry, maybe I'm a girl, I'm dating a guy. So one day the guy proposed to me, saying that, hey, Cayden, we're gonna get married. Yeah. So right now is I need to say either say yes or no, or I need to think. There are only a few choices. So how do I know whether it's yes? It's based on the past because I partnered with him for maybe 5 years, man. Yeah. So same thing. Before I buy a company, how do I know a company is good and I need to marry this company? It's based on data I collected from the past.
Okay.
So based on the data I collected in the past, based on how much I know this guy, and I'll do a projection into the future.
Okay.
That because the guy is good in the past, today if I marry him, in the future it should be good.
Okay.
Yeah.
Yeah.
Something like that.
Yeah.
So if the past company is good today, if I marry this company, in the future it'll be good. But in the future, future is 1 year, 2 years, 5 years. We need to make an assumption. So what we do is when we invest in a company, we are actually paying for a company's future. Pays future. And if we take the future's earnings of the company and then we bring it back to today, and then there'll be some calculation that's being done by our VA calculator.
Correct.
Then today we say, how much is this? Okay, this business is worth, let's say, $1 per stock.
Yeah.
So if it's $1 per stock, as much as you can, we want to buy below $1.
So basically, discounted cash flow is like kind of predicting what's the future cash flows
Yeah,
of all the
yeah.
cash flow
And
and
how much it's
operating
worth
income
today.
and everything. Okay, and then you work backwards to how much it is worth today.
Yeah. So there'll be some calculation.
So what you get, right, is the value of the business, okay, right?
Today.
Price is what you pay for, value is what you get, right? This is
Yeah.
what Warren Buffett say.
Yeah.
Value is what you get, price is what you pay for, right?
Yeah.
So maybe if a can of Coke, the value could be $1, but if I pay $2 for it, then I overpaid for that
correct.
Coke, right? Same thing for a company, right? Like you can work backwards and you know the value of that company, right? Based on a lot of ratios, based on the profits of the company, based on the dividends they pay out, based on a lot of things, right?
Yeah, a lot of things.
But so once you know the value of the company, so long as the price is lower than that value, then it's a good investment.
Which brings us to the point about the myth or misconception that investment is risky. Now let me give an example. Let's say just now we talked about the one piece of paper which is $1. $1. So right now let's say this stock is worth $1 and I use 10 cents to buy it. So the value is $1, but I pay only 10 cents. So because I pay only 10 cents, my risk is 10 cents. In case this piece of paper is worthless, I then lose 10 cents.
Yeah.
But if I buy at 10 cents and I sell $1, then I make 90 cents.
Yeah.
So actually my margin is 90 cents, which is 90%.
Correct.
Yeah. So you realize that the risk is low and the margin is high. Dollar. Now on the other hand, if we do nothing, right, then anyhow go ham tam. So this piece of paper $1, but we paid 90 cents. So if the paper is worthless, we lose 90 cents. But if we sell $1, we only make 10 cents.
Correct.
So you realize that this is the high risk, low return. Versus just now was low risk, high return.
Yeah.
But in order for us to have low risk, high return, we must buy a good business at a really cheap price.
Yeah.
And in order to do this, it requires knowledge.
Yeah, of course.
Yeah. So
And
if you got no knowledge,
Yeah.
you will buy at any price, which is very dangerous.
Okay. So one question is, so now that you have the value investing checklist and everything, right?
Yeah, checklist.
If every student calculate, right, they will all come out with the same value of the company, or they'll all have slightly different value or very different value.
They might have different values because the assumption, right, that they use is different. Yeah. So we need to appreciate that finding the value of this piece of paper is an intelligent estimate. Yeah. And
So different people have different estimates.
yeah.
Okay.
Well, which is why in the valuation process, it's important for us to have a buffer of error.
Okay.
Yeah, buffer error. And this buffer error is called margin of safety. So in short, if that piece of paper is $1, you calculate it's $1.
Yeah.
And because the assumptions involved in calculating this dollar, you scared to lose, right? So what do you do? Instead of $1, you minus off 30%. So it's actually 70%. So in fact, you don't
Calculate on the low side.
Yeah, exactly. So in
Yeah.
other words, you don't buy below $1. You want to buy below 70 cents.
Yeah.
Yep. So you have this 30% margin of safety.
Got it.
Yeah. So having this margin of safety, in fact, again, is to lower risk because the lower you buy, the lower the risk, and then the higher the return. Yeah.
So let's talk about angel investing, like startup investing. Okay.
Yeah.
Have you invested in startups?
The answer
before?
is no.
Okay.
I don't think I'm very good at it.
Okay.
Yeah, a bit kiasi, so I don't do it.
but okay, you've never invested in a startup or angel investor or
Have in 2000 now
venture.
where I lose money.
Okay, okay. So,
After that, I'm like, oh yeah.
okay, but is it okay, like what do you think about angel investing? Okay, what are your thoughts? Let's give a objective or yeah.
Okay, my after I lost the money in year 2000, I become very paranoid. Yeah, about things. So I think becoming paranoid about things, I think is good. Yeah, it's good for me in the sense that then I incline to Warren Buffett saying the investment rule number one is never lose money. Yeah, never lose money. So whenever I park a money or whatever, it's my hard-earned money, it's my saving, I spend a lot of time. Yeah, so I want to find something that number one, there's capital protected. And number two, I have very high chance that they will make me money.
Okay.
Yeah. So unfortunately, startup company, depending on what kind of startup company, most of them don't make it. Yeah, because I have friends who are fund managers, who are like angels investors in very huge funds. This one I cannot mention it.
Okay.
Yeah, but most of the startup company they invested, in fact, most don't make it. Yeah, most don't make it. Sadly lah. But their logic is, if most don't make it, why do they do it? Because they are betting on one. If one make it, then this one will override whatever losses.
Correct.
Yeah. So their philosophy is they take a bet. Out of 10, 2 make it. Then 2 will outshine the remaining 8.
That's how venture capital
that's how venture
works.
Yeah. So there's no right or wrong.
Okay, normally out of 10, 2 make it, 4 will be average, 6 will fail.
Yeah.
Like 4 will fail. Something
so,
like that.
so it's a probability game.
Yeah.
So this one, they're very good at it, but I'm not very good at it.
Okay.
So I'm the gassy type. So what I do is when I put X dollars inside, at night I sit comfortably. I know 9 will make it maybe 1 don't, or 8 will make it 2 don't.
Okay.
So the 8 will override the 2.
So does that mean you will recommend like investing in blue chips stocks rather than blue chips means the
big ones.
The big ones are like Apple and
So
Walmart,
it all depends. We go back to the fundamental is big company, small company, medium size. Number one, they must be good. The second thing, it must be cheap. Yeah, cheap. And investing in big companies, small companies, there's a pros and cons.
Yeah.
Like for example, if you invest in big companies, predominantly you want dividends because they're big. Yeah. So good thing is they pay stable dividend. Their company is stable, so at night you can sleep properly. But the drawback is because they are big, they cannot grow as fast as the small one. So the capital appreciation is really low. And then for small companies like venture capital, small companies like my company, the revenue can double, triple very quickly. So capital appreciation is fast, but unfortunate is they're either very low or zero dividend, and they are not as high risk. Because small companies, one day they may close anytime. Yeah. So pros and cons, and it all depends on the profile of the investor. Then they select. They can have a portfolio of some small, medium size, big.
What's your risk appetite?
Yeah, the risk appetite. So this one, fortunately.
So you're quite risk averse.
For my age, yes, I don't think I live forever.
Okay.
So which is why it's important that during our training, they need to have a portfolio, and this portfolio needs to be customized to each profile. Or young one, different.
So
medium
all
age
your
one,
students
different.
all have a different.
Yeah,
portfolio.
different profile.
Okay.
Yeah, and the baseline is capital protection.
Okay.
Yeah, this is the number one. Never
Never lose money.
Yeah, this is very important. I'm getting old. I cannot lose money.
I understand. So, do you think an entrepreneur who wants to raise funds, right, by learning value investing, right, by learning what an investor looks for, will be able to raise funds more easily?
Yeah, I think it really helps.
Okay.
In the early days when I invest, I couldn't see the dots connect.
Okay.
Then I realized that because in my group of students, there are about maybe 20% who are entrepreneurs.
Yeah.
Yeah. So some people let me give you an example. Some people they run a printing company, but printing company is a commodity product. They compete by price, and nobody has ever sustained by competing in price, and they are small outfit. So then after they attend the training, they realize, my company has no economic mode. Wow, then how? Then they need to go back and think, crack their head. My printing, how to that. So actually, if they're entrepreneur, it helps them in thinking from how investors think. Maybe one day you say raise capital, that kind of thing. They can sell it to angel investors and so on.
Correct.
So it really helps investors. So like what you say, it totally makes sense.
Okay.
Yeah.
And one thing I read T Half Acres book. There's this book called Speed Wealth, right? Okay, one of the things he said was you'll never make as much money running a business compared to owning a business.
Yeah.
Okay, which means, for example, if let's say you own a business that makes 5K per month in profit, okay, net profit 5K per month. How much is this business worth? Let's say if you take PE ratio.
Oh, this one is quite hard to say. Yeah.
Okay, but let's say if it's just by average P ratio in the whole market, and
Yeah, uh, there are a lot of variables
Okay,
in order to
okay.
answer the question. The first one is, okay lah, if the person make 5K of net income or profit, right? So 1 year, let's say 5 times 12 will be 60K.
60K, okay, 60K per
Yeah,
annum.
60K, I will have to ask a lot of questions. Like for example, first question I ask is, what kind of business is this?
Okay.
Can this business sustain for 1 year, 2 years, 3 years?
Mm-hmm.
Yeah, the barrier entry.
Okay, let's say it's a sustainable business, has been consistently making 5K per month.
Yeah. Then my next question I have to ask is, if
Let's say
they,
for the past 5 years or
Yeah.
past 10 years, it was making 5K per month. How much
Yeah.
is this business worth?
Yeah. So if let's say this business has been making, let's say 5K, which is 60K for the past 5 years, then the ask is, in the next 5 years, can they make this 5K?
Let's say it's like it doesn't grow one. Let's say this business, right, it's like a, you know,
It's a flat lah.
Yeah, flat.
In fact, unlikely I will do it lah.
Okay, but what
Yeah.
what
Number
would be
one,
the
because-
valuation of this company?
Yeah, because I wouldn't bother to value it in the first place.
Okay.
Yeah, number one is I will find valuating will be a waste of time. The reason is, number
Because they
one,
don't grow.
yeah, if the company is small, past 5 years they've been making 60K per year, and this person tried to convince me that in the next 5 years they will make 60K. My question is, if you're a small company, you shouldn't be making 60K in the future every single year.
Yeah.
Yeah, it should be 60K, then maybe 80K,
Seven,
then 100K, then 120K or whatever.
Okay.
Yeah. So this should be, there should be high growth.
Okay.
Yeah. And if their growth is 10%, I also don't think. Yeah. For a small company, maybe minimum 20% per year. 20% of the previous 20%,
Okay,
and then 20% for previous 20%.
Compounded.
And yeah, then in order for this one to happen, then this fella need to convince me that whatever things you have at hand, you can do it. Because projection is anybody can give any projection. Yeah, projection. But you
Yeah.
need to convince me that whatever things you do, it makes sense. Yeah, so that when I give money to you, at night when I sleep, I know next year is 120, and after that 240. So you know, if the person cannot convince me, right? Unlikely I will even think about valuation.
Okay.
Yeah,
okay.
because remember, cheap and good business. So first it must be good.
Mm.
So if it failed the good, right? Even it's cheap, I also don't want. Yeah, it's like if the fish is not so good, right? Fish is not very fresh. You ask me to buy for 10 cents, I also don't want, because I still have to bring back home and then throw away. Too troublesome, right?
I understand. Okay.
Sorry, that's just my thinking.
So okay,
Yeah.
cool. Then what do you think about Bitcoin?
Oh, this one I also not very good at it. Yeah, but I won't do it.
Okay.
Yeah.
But what do you think about Bitcoin? What's your perspective? Or
Wow, this
everyone
one,
has a different.
this one where I say
They become like a religion or a political kind of thing, right? Because it's a very sensitive topic for investors.
this one was I share my opinion. I think my fan page will come out one time. Okay, I just
Maybe
share.
speculation.
Yeah,
Maybe that's-
maybe. let me see how I can phrase this nicely. Okay, so you see, my philosophy in investing is to find a cheap and a good business.
Yeah.
Yeah. So when
Okay, that's the most important thing. If you all forget everything, right, just remember
Yeah.
cheap, good, and grow.
yeah, correct. Because the video quite long, so you just remember so cheap and good. Good one. Okay, now. So first it must be a business.
Yeah.
Secondly, it must be good. Then the next one is must be cheap. So why we say it's a business? Because business is an asset that give us income. So for example, you run your Facebook marketing, or it's a business because it give us income. So like your mom was promoting about sleeping, pillows, all this, produce income. So it's a business. So now the question is Bitcoin. Does Bitcoin produce income? Is there an underlying asset? Yep, Starbucks has a cafe, McDonald's has a restaurant. So Bitcoin at the back, what is Bitcoin? Is there a business? Is there something that provides value?
But it's the same as gold, right? Is there a business behind gold?
Yeah, which is why I never invest in gold.
Yeah.
Yeah. So
Yeah.
which is why I only
Explain the thing of you put a gold bar in the safe.
Yeah, correct.
Explain that.
Yeah. So the key thing is Bitcoin. I have no idea what is it, but of course people will say, oh, blockchain. Oh, blockchain is going to change the world. I say thank you, but so far has blockchain make any money? Yeah. So is either yes or no. Yeah. So let's say right now all of us people who are watching this. Let's say you have 100K lah. 100K took you 20 years to save up, Okay, and in front of you there are only two choices of investing. One is to take over one McDonald's restaurant, 100K. Let's say 100K. And the other one is to take 100K and then buy Bitcoin. That means you can only show hand, you cannot diversify. So you ask yourself, which one will you put your money in so that at night you can sleep peacefully, and then the rest of your life you get paid.
understand.
Yeah. So the answer to that question is actually the answer to Alaric's question, whether which one is better.
Okay, so what Cayden mentioned also is like invest in income producing assets.
Yeah,
What's
income
income
producing.
producing assets? You see, for example, if let's say I invest in a business, okay, and this business makes money, I get dividends, right? So I
Yeah.
get an income from the
Yeah.
okay. So there are two parts of when you invest in a stock. There are two ways you make money. Number one is from the capital appreciation, means the stock now is $1, next time it becomes worth $1.20. So the capital appreciation. But the second is the dividends that it pays you every year,
Yeah.
right? They pay the shareholders dividends. Okay, so that's the first thing. The income producing. So if you invest in a stock, you get dividends, right? If you invest in a property, okay, you collect rent every month, and the price of the property can go up. Or there's capital appreciation for the property, and you collect rental income. So these are called income producing assets, real estate and stocks. Whereas if let's say you invest in a gold bar, you put 1 kg of gold bar in the safe, right? The gold bar will not become 1.1 kg, right? At the most, the price of the gold bar will increase. So that's only the capital appreciation part, but the gold bar doesn't have the income producing part of it. Yeah. So
and the risk is in the future you do not know whether the price will go up and down.
yeah.
Yeah, and you only know after you waited. For example, if you wait 50 years, then you realize that the gold price never go up. No?
Yeah.
Wow, then you wasted 50 years of life.
So whereas value investing is investing in a business that makes money, or you know, like let's
You
say
wanna
pays you
collect
8% dividend, 2% dividends, that kind. Yeah. Cool. So
ultimately, remember there's no right or wrong. I'm the paranoid type. So I want an income producing asset.
Yeah. So I mean, it's true. A lot of people make money from Bitcoin. A lot of people have lost money from Bitcoin. It's the same as Tulip Mania in Holland, right?
Yeah, correct.
In fact, there are so many alternate coins right now in the market. Everyone's going to launch their own coin.
Sure,
There's so
ICO,
many coins out there. They want to raise 10 million, 100 million.
Yeah, correct. I really wish all the best to them.
Yeah.
Now, which is good. If they really can make money out of it, I'm happy for them.
Okay, cool. So
investing.
talk about STI or talk about
Okay.
what's STI or how can they get started?
So maybe to end off the video, I can
give one.
I can just share with you some ideas how to get started investing. One of the best way to start investing, which is recommended by Warren Buffett. There was this quote that says something like when he pass on, take his money, 10% put into bonds, government bonds or stable bonds or whatever, and the remaining 90% of his money put into this thing called a low cost index fund. Low cost index fund. And this low cost index fund sometimes is known as ETF, which is an exchange traded fund. So for example, Singapore, we have STI ETF, Straits Times Index Exchange Traded Fund. And in US, we have like S&P 500 ETF, S&P 500 Exchange Traded Fund. So one of the best way to invest is actually to invest in an index fund, for example, S&P 500. Yeah. So in other words, if we can turn back time, if we can travel back in time, we take 10K, and then let's say many years ago, 1965, you put 10K into S&P 500 ETF. Today, assuming that the dividend they collect, you compound along the way. 1965, today, if you open an account, it will be actually about 1.3 million.
If you invest how much?
10K. So now it's 10K to 1.3 million. But of course, it takes time.
100 times.
Oh,
no,
I don't know how many times.
You're saying invest 10K every month? Or
no. 10K, that
invest
means,
one time?
Yeah, one time.
Okay, so if you put 10K,
10K,
one
1965,
time
one
into
time.
1960 in STI,
today will be about 1.3 million. Now,
that's 130 times.
Yeah, correct. And but of course.
Okay, what's STI first? It's a basket of goods. It's a basket of goods.
Yeah, exactly. So, this one needs some time to explain. So, in the stock exchange, sometimes analysts will always talk about this thing called index. Now, how index work is very easy. What they do is the analysts wanted to have a feel of whether share price is going up or down. So they need to have a reference point. And what they do is they take big companies which can represent the entire stock market, and then after that they take the stock prices of each company and then they average out.
Correct.
Yep. So in STI, Straits Times Index, is an average of 30 companies, and then S&P
What
500.
like the top 30 companies in Singapore, basically like DBS, SIA.
And so on. So if this number, average number goes up, that means they say the market is bullish. This number go down is bearish.
Because it means that 30 companies,
the average share price goes up.
the average share price up.
So this number has a name. They call it index. But you cannot invest in an academic number. So the fund managers come together and then they start a fund. So they take a fund and then they mimic and then they copy this index shamelessly. So in other words, if this index has startup, they'll take the money, invest in startup. So if Starbucks. So if this Starbucks takes out 2% of the entire index, they will take the money and then they put 2%. So they just copy lah.
Yeah.
So once they copy, this index fund has a name, which is sometimes known as ETF. Yeah. So index you cannot invest, index fund you can invest. Another name of index fund is called ETF.
Yeah.
Yeah.
Okay.
Yeah.
So like S&P 500, right? Is the basket of 500 companies in America.
Yeah, in America.
So
you buy one stock.
And what's the average increase from?
Based on what actually you can Google, you can type in Berkshire Hathaway, you click on the link, letter to shareholder, you look at the 2017 one, then you launch a PDF document, first page, you look at the last one. Yeah, very detailed, very micro, yeah. So you will see this number, and this number is 9.9%. But pay attention to the fine print, it says that the dividend is reinvested. So this 9.9% is an average annualized ROI since 1965 to today. So how I get that 10K to 1.3 million is I take the 10K, I plug into a compounding interest calculator. So I start with 10K, then every year 9.9, then I put the number of years, which is I think 50 plus years. Then today when you see the number at the bottom, with 1.3 million. Yeah. So sometimes when I say there was one video that I did, I say, is it possible to turn 10K to 1.3 million? Wow, this one I kinda ham left, right, center. Then they say the video is a scam now because they never watch the video, they only see the title.
Yeah.
So inside the video, I shared that it's possible. It's just that it's going to take a long time.
Yeah. Okay. Let's just put things into perspective. Okay. There's this rule called the rule of 72, which means how to find out how long it takes for something to double, right? Is the rule of 72. For example, which means, let's say if a stock gives you 8% returns per year, that means, right, 72 divided by 8 is 9. So it takes you 9 years. If this stock gives you 8% returns per year compounded, it takes you 9 years to double your money. Okay, if the returns is 10%, okay, so 72 divided by 10 is 7.2 years. So it will take you 7.2 years to double your money. If the returns is 4%, let's say, that means 72 divided by 4, which is 18. So it will take you 18 years to double your money. Okay, now, if let's say the stock returns, right, is 10%, okay, that means it takes you 7.2 years to double your money. Okay, think about it this way. So the first 7 years, right, let's say your 10K becomes 20K. Your 7th to 14th year, right, on your 14th year, right, your 20K becomes 40K, so your money 4 times. Your 14th to 21 year, right, your money goes 8 times, right, because 40K will become 80K. Your 21 to 28 years, right, your money becomes 16 times, so it becomes from 80K to 160K, then it becomes 320K, then it becomes 640K. So is it possible? Actually, it's possible. Let's say you count 50 years. That's 2 to the power of 5. So
I don't know whether the video can capture this. This actually is 1 million. Sorry, I think I better correct this. So you see that the starting capital is 10,000, and then 9.9%. I got it from the Berkshire website, and at bottom you see 1 million. So it's possible to turn 10K to
just
1 million.
Invest in S&P 500.
Yeah, but there is a catch. So most people never see the catch because they never finish, they already hamtam me. So you see the catch is you take 49 years. Yeah, 49 years. But most people don't wait 49 years. Cayden, I got 10K right now. But 49 years, but I'm already 50. How to wait 49 years? So I say, if let's say you're older, you're middle age, and then 49 years, it's too long. Then what we need to do is, there are only a few variables you play with. Number one, you increase the capital. Next one is, you put more money in between, annual addition. So this is the so-called 49 years. So let's say every single year I could save 8K. And then, let me just press this with my arrow. Okay. So this one is, I add on 8K every single year. So you can see there's a difference. Everything I didn't change, but I only add on 8K every single year because I'm a saver. So if I add on 8K every single year, you realize that the 49 years suddenly become 26 years. So you half the time. Half the time. But of course, if you buy the LV back then, you do it very long.
So that's why like if you realize most of the value investors that I know, right, number one, they are very humble. Number two, they are very thrifty. Like they don't really spend money on like LV or that's one thing I realized. And I really feel that if like those true entrepreneurs are not those people that say they're entrepreneurs or on Instagram they're like, oh, watch me with my Ferrari and all that. Those are marketers, they're not really but those like true entrepreneurs like Gary Vaynerchuk and all that, right? Gary Vaynerchuk, he goes on airline, he take economy class and he don't take business class, even he's Gary Vaynerchuk, right? So I think frugality is
Yeah, it's important.
is important also. Even Li Ka-shing is pretty frugal.
Yeah.
Yeah.
His
Warren
watch,
Buffett.
his watch is $500 a
Yeah,
US.
yeah.
When he's the richest person in Hong Kong.
Yeah. So
Yeah, it's quite amazing. So he
Yeah.
got money to invest now to grow his business.
correct.
Yeah.
So okay, so
So ETF is one
So
simple
how
way.
can they invest in SCI? Do they have to open a stock account or yeah?
Eh,
Share with them.
well, this one, the POSB DBS is going to be very happy with me.
Yeah.
Because the DBS, by the way, I get nothing from talking about this.
Yeah.
So DBS, POSB, they have this thing called, I think,
This is very important.
POSB
Okay, this is the
Savers
golden
Plan.
tip. Since you have listened for 55 minutes, right? This will be the golden tip for you, okay?
Yeah, so they have this
To grow your money.
POSB Savers Plan,
Yeah.
and every single month minimum is $100.
Yeah.
So what they do is once you actually you can just go online.
Mm.
You click there's a savers plan.
Yeah.
Or you can send a message to me a private message. How I can send you the link. Yep. So what you need to do is once you only take you 5 minutes to do this, and then what POSB or DBS will do is every single month they'll take out $100.
Yeah.
So January $100, February $100, and then they will take this $100 and then they will buy the stock
STI
index fund.
ETF. Yeah.
Yeah. So if the share price go up, they buy. Share price go down, they buy. And then across the period of years, it's quite good return as compared to the bank's interest rate.
Yeah. Okay.
So this is STI ETF.
So that's how you invest in SCI ETF, okay?
Yeah, this one
okay,
way.
the management fee or like the brokering fee is 1%.
1%.
Which means if you invest $100, it's $1.
Yeah, $1.
If you invest $300, it'll be $3.
Oh,
Okay.
not bad, you do
Now,
your homework.
but here's the thing, Here's the thing. If let's say you invest in the stock market, you ask a stockbroker to buy shares for you, normally it can be $25 per trade.
Expensive, don't do it.
Which means if I invest $100, right, then $25 go to my stockbroker.
You already lose money.
I already
5%.
lose money, right? So STI ETF can be a very good savings plan or can be very good for savings, can be very good for investment because it's very low cost. 1% you can afford 1%, right? And it's something that and it's automatic, means every month it will just like deduct from your bank account and into, so you end up buying the stocks. So your net worth will stay the same because you will have cash and you have STI ETF.
Yeah.
And I've been doing that for the past two years. So it consistently, and it gives returns.
And there are other ways where there's zero commission. That means just now we're talking about 1%. In fact, there's some 0%. Yeah, there's some platform, but this one I cannot say. This one's a secret. You PM me, I'll tell you.
Why? Because I got invest.
Sekali, I don't know.
Anyway, so
there's some tricks. There's some tricks.
yeah, so
There's some way up.
yeah,
This one I only tell Alaric.
STI ETF. So you can. So how you go about it, right? Is you put in your ATM card into the ATM machine, right?
Yeah.
After that, I think you press more.
Yeah, now
instead
cannot.
of
Now must go online.
Huh, really?
Yeah, now they stop the function already.
Oh, really?
They stop.
So last time what I did was I just go to the ATM, I put in my ATM
Last time
card,
ATM
I press some buttons, then I can invest like $100 every month, or $300 every month, or $500 every month into STI ETF. But now
they stop
you
the
have to go
function.
online. So you search how to invest in STI ETF. So this way you buy a basket of 30 groups, of 30 companies. Okay. I just want to let you know that the stock market, right, generally is always growing on, like in general, because these are real businesses. Businesses naturally
For STI,
on average grows.
For STI,
has been
S&P
growing.
500.
S&P 500 has been growing. Most of the indexes,
Actually, some of the indexes.
indexes have been growing. So and it's very diversified. It means it cannot be the whole index. If the only way your STI can go to zero, right, is if one day Singapore kena war
Or the company close.
all the 30 companies in Singapore close. Then only,
Which is unlikely.
Which is very unlikely.
Yes.
So go ahead and invest in STI if you want to start in value investing. But if you really want to learn like how to generate higher returns, 20% or more, then you can look for Cayden. Okay? So Cayden, can you share your how can they look for you? Any links or what's your social media handles? Yeah.
Social media. Okay, so if you want to know, it's quite simple. There are two ways you can learn something. One way is you can go to this website called Value Investing Program. One single word.
Okay, how to spell program? Is it?
Yeah, the program, there's a shorter one, there's a long one. You type either one, is fine.
Oh, both also you bought the domain.
So I already bought two domain, right? So for
Value
example,
investingprogram.com. Okay,
Yeah.
make sure you go to this program.
Yeah, there's a long word program, there's a shorter word. Either way, you go to my website. So this one way, so you
then
can
go for his free preview, free seminar, free class.
So I call it master class. So you just learn something. There's no obligation or anything. I think the fact that if you come and you learn something, I'm very grateful. So this one. Another one is we have a blog site where you post really a lot of stuff. In fact, I think if I take the blog compile, maybe it's 10 books,
Yeah.
Yeah, and it's absolutely free. There's no obligation. And the website is called valueinvestingacademy.com. It's quite simple.
Valueinvestingacademy.com.
So one single word, valueinvestingacademy.com. Value investing program long short. You also go to my website.
Okay.
Yeah, or you can also add me on Facebook. But there's a long list, so you can search. You can search for Cayden Chang, and if you see a Jack Ma
Cayden Chang.
Yeah, you can either my fan page or my site.
Okay.
Yeah, you can just follow me lah.
And how can they get this book?
This book, I think they can go to any major bookstores, Popular, Times, Kinokuniya, or whatsoever.
Okay. Then Cayden also has this book called The Book of Hope because he's a
Two-time cancer
he's a two-time cancer survivor. He has appeared on the newspaper regarding this, and I think he did an autograph copy for me.
Yeah,
so I'll be reading this book.
I need to
right?
give
He has
this
a
book
lot
to this young
he has
man.
a lot of
It's an
nice
inspiring
pictures
book.
and I'll go and read it, and I believe it will be very inspirational.
Yeah.
So
So far, I published I've written 3 books. The first book is on entrepreneurship. So the money has been given to this fund called the Straits Time School Pocket Money Fund. Yeah, it's for kids with no money for their pocket money. So this one. The second book that I've written is actually this book. Yeah, this book I've written about 2015 after my stage 4 cancer. So again, all the royalties are donated away. This one specifically to National Cancer Center for Research Fund. Yeah, so this one. And this one is not written by me. It's written by 3 very very good young men. They are investors, but it's published by my company. So the money again is donated to National Cancer Center Research Fund.
Correct.
Yeah. So far, I've written 2. I've helped to publish 1. And then recently, I've just launched 1 book in Japan. I didn't have a copy with me. Copy. Is it okay?
No, it's okay.
It's okay. Can I go put one?
okay, sure.
Yeah.
Yeah. So he's going to get the book now, and all I can say is that when you get educated about money, when you get educated about investing, you realize that actually making money is just an idea. Yeah. When you understand marketing, sales, branding, investing, and the reason why I always get top teachers, speakers to share what they know is because I believe that if the whole Singapore knows investing. Okay, now what do you think will happen, right? If all Singaporeans are educated about investing, what do you think will be the economic impact, the social impact? What would be the impact if Singaporeans all knew value investing?
I can say that it will never happen.
But what if they teach it in primary schools and
What
secondary
if,
schools?
I think that what if is the probability is going to be very low.
Okay.
Why most people will never go in investing, right? Because they will always have this mindset that investing is risky. And the sad part is before people even talk about it, their minds already shut. Yeah, and this shutting of mind requires time for them to open up.
Yeah.
So by the way, I couldn't find my book, but imagine that this is a book. This is how the book now. Interestingly, I launched this book in Tokyo. I think on the last week of March. Yeah. After that, I went for a 2 weeks tour. Yep. So on the first day of launch in Tokyo, in fact, in some of the Kinokuniya bookstores, all the books were sold out. Yeah. So I'm quite lucky. Number one, I don't speak Japanese. And for a non-Japanese to penetrate the Japanese market, which is very difficult, it's almost impossible. Yeah. So what I did was I got this book out. It took me about 1 year, to be written and then translated. A lot of challenges. So I went for 2 weeks.
So what's this book about?
Oh, this book, in fact,
the title.
Yeah, the title is the introduction to investing.
Okay.
So with translation, and then on top we say, you can make money while you sleep. Now, make money you sleep is like what Alaric was saying, the dividends, the capital appreciation. Yeah. And this is the third book that I've written, and all the royalties will be given to the Children Cancer Association in Japan. Yeah. So 3 books written. There was never a day that I collected a single cent.
Cool.
Yeah. So because I'm a cancer.
Yeah, but okay, let's continue talking. What do you think will be the impact? Let's say hypothetically, if everyone knew investing, would it be competitive, or would it make investing more competitive, harder to make money, or if everyone knew investing, what would happen?
I think what I can say is, if technology advances and then getting information is easier, and then if there are more and more investors, the impact is it will be more and more difficult to find a cheap and good business.
Yeah.
So if you compare,
actually, if you teach other people, you're actually increasing your competition to buy the cheap business. Is it?
We are actually not really competing because
like for example, for me, when I teach marketing, right?
Yeah.
Actually, I'm creating my own competition, because marketing, right, is something that if everyone do the same thing, then it wouldn't be as effective as
I think for investors, the context is a bit different is because, like for example, let's say they go and buy Starbucks. They invest in Starbucks and they invest in McDonald's. Yeah.
Oh,
and
true.
yeah,
There are so many companies to invest in.
So I'm not competing because you're not starting a business. I'm not starting a business. We are not in the same niche or whatever. We are not targeting the same pool of resources.
Okay.
We are not. Yeah. So the impact, like just what I say, is if more and more people become more educated, people are more aware, then it gets more and more difficult to find cheap and good stocks.
Okay.
Like 50 years ago during Warren Buffett times in the early days, there's no computer. So it's search stock by like yellow page, like yellow page in stock market world. So it's hard copy. And because hard copy is tedious, people don't do it. So it's easier to find stock.
Yeah.
Cheap and good. But right now you just click, wow, got screener. So it's easier. So people are very aware. Like if let's say Facebook has a scandal, wow, everybody knows. Yeah, technology advanced. So what's going to happen is as time passes, it's going to get more and more difficult to find.
Okay.
Yeah, which is why it's important for them to know how to find a cheap, good company.
Okay.
Yeah, they need to find a simple way, easy way.
When everyone knows investing, right? Will the world win together, or or there'll be even more competition? Is it a win? If let's say you know investing, I know investing, is it win-lose or win-win, or will there be more abundance, more scarcity? What happened to what's the impact?
Yep. So investing, there's always a buyer and seller, or there's a seller and buyer. So the question is, the winner will always be the one that's smarter than the other one.
Okay.
Yeah. Like for example,
the one who buys lower and sells higher. Right?
Yeah, correct. The ones who buy lower and sell higher, and vice versa. So the one that's more intellect, they do some homework, the one will win. Yeah, the one who win doesn't mean that the other one lose. Yeah, they could make 20%, then the other fella maybe make 10%. It all depends.
Okay.
Yeah.
Okay, cool. So thank you so much for your time.
Yes, thank you.
I hope that you've gotten a lot of value.
Yeah.
Right. Go and
Value
find
investing
business. Go
academy.com.
valueinvestingacademy.com, valueinvestingprogram.com. Get the books. Go read. Read his blog. Follow his page and get educated about investing. Okay.
Yeah.
So that's about it. Thank you so much.
Thank you. Goodbye.
The most electrifying entrepreneur.
The most electrifying entrepreneur.
The most electrifying entrepreneur.
The most electrifying entrepreneur.
He's the most electrifying entrepreneur.
One of the most electrifying entrepreneurs that I've ever met.
The most electrifying entrepreneurs.
And here is the most electrifying entrepreneur.
That don't kill me, can only make us stronger. I need you to hurry up now, cause I can't wait much longer. I know I got to be right now, cause I can't get much stronger. Man, I've been waiting all night now, that's how long I've been on ya.